morning, everybody. Thank you so much for obviously being with me today. I know finance is not the most exciting subject, that subject of money. We've obviously got an impending budget, very long awaited, that's coming up on the 26th of this month. So what I want to do for my session is just give you some confidence around some of the key areas and you can just be mindful of whilst you're thinking about that sort of career transition, but also to help you feel sort of empowered, knowledgeable, so that you're making those informed decisions moving forward. So we've got an opportunity as well for lots of questions at the end, so please bring them forward. So what we're going to look at is we're going to look at some practical kind of money moves for life's big shifts. And I know obviously today's session as a seminar is a fantastic opportunity for you to be part of a wide number of sessions all throughout the day, looking at all the different elements. And then obviously I've got the job of bringing that into the financial lens for you. So by way of introduction and who I am, I'm Katie Vine. I head up a workplace financial education business called Better with Money. Now, I've been in the industry about 24 actually years now. It says 23 up on the slide. Having started as a graduate within one of the largest banks within the UK, I've moved through employee benefits, wealth management, and a theme of financial education that's always run through. So I feel super passionate about that. I work with lots of employers as well to help them to support their employees to think about sort of financial literacy, building financial resilience. And that's then what we want to bring to the seminar today. So I'm absolutely delighted to be here to support some of that thinking. But it really is your opportunity for you to ask whatever you've wanted to. Hopefully I'll have the answer for you, but if not, we can absolutely take your details away and make sure we come back to you with that. But I'm confident should be able to get your thinking in the right place. Just to cover off, there's no financial advice being given today. It is purely just factual information, guidance and signposting to a variety of sort of unbiased, independent resources that you may find useful moving forward. So in terms of what we're going to have a look at then, we're going to focus on money confidence. Quick show of hands, when you're thinking about a potential career move, who finds that kind of finance section a little bit tricky? Excellent, and that's why you're all here then today, which is wonderful. So we're going to have a look at money confidence. We're going to have a look at preparing for life quakes, and I'll explain a little bit more about what I mean by that. We will focus on some of the challenge areas as well that may not be glaringly obvious to you around what we see in the workplace, but also what's actually encouraging people to maybe move as well. We'll focus specifically on those career change considerations, so give you a little bit of that action plan to take away. And then to wrap up all of this, you've got a fantastic toolkit, the career change toolkit that I'll signpost at the end that I would really, really encourage post-session, post-today's seminar to go and have a look at. And again, that will give you lots more information to help you make those informed decisions. And then we've got an opportunity for you. So for any questions you've got at all, like I said, please do. I think we'll have a roaming mic that will happen. So just pop your hand up, the mic will come over. And I don't think we actually need it given how sort of small the room is. So if you're happy to just shout out, then please do. So let's make a start then by having a look at the issues that are typically affecting careers, some of our decisions, and some of our personal finances as well. And the first being that lack of confidence. We're going to break all of these down. We're going to go through them in a little bit more detail. We've also got gender pay and pension gaps. What does that mean? What should we be mindful of when we're thinking perhaps about that career transition? Caring responsibilities. If it has managed to escape your attention, it's very heavily kind of featured in the press now. But some of those financial impacts that we're really experiencing when we're assuming some of those caring responsibilities. Menopause, divorce, redundancy, perhaps. For some of you, you may be in a situation where that might be looking likely. So you're already starting to think about what that next step looks like. So all of these typically, and there's many others, but this is what, unfortunately, given the time we had, we needed to just try and pin it into what's most important, hopefully, for you. But all of these can play into an opportunity for us to think about what's next. And what we want to make sure is we just give some consideration to all of those kind of personal finance elements that come around that. So when we think about confidence, typically, and it doesn't matter what study we look at, we know that when it comes to personal finance, we can feel quite underconfident about that, particularly when we look at studies in an investment capacity as well. And certainly for the females in the room, typically we tend to be less confident when it comes to investing. Okay. Now, that said, that certainly doesn't exclude the men that we have in the room, because of sometimes that gender bias that we tend to see around finances. There are equally challenging statistics out there as well for men, and around some of the role that's perhaps, perceived around what they should be doing. So we've got a stat here: 49% of men in a study admitted that they had kept money-related secrets from a spouse or a committed partner. Now, that also works both ways, let me say, because as part of my role, and certainly over the years, I've done lots and lots of one-to-ones where actually it's not uncommon, male and female, to sit in the room and say, I don't tell my partner about how much I spend, it goes on a credit card, or I've got this store card and I'm not really sure what to do. In the same respect, from men's perspectives, and we can see a statistic here, 71% of men aged between 18 to 24, so our younger generation coming through, believe that the man should be the primary breadwinner within the relationship. So again, all of these things start to play into when we're thinking about career changes. Suddenly, it's natural for our confidence to wobble when we're thinking about that. And when we sort of then move forward to look at, again, from a confidence perspective, how does that play into some of the other areas that we're dealing in? Well, actually, we've got this huge caring responsibility that we need to think about and we need to look at. We've got at least 5.8 million carers that are providing unpaid care in the UK. So it's not always the traditional situation of maybe what we think about, where we're kind of, doing Meals on Wheels. We've perhaps got an elderly parent living with us. This is that unpaid responsibility. So it could be, and I've got a number of colleagues actually that are in this situation currently, where we'll be in the middle of a meeting and their phone goes, and it's their elderly parent saying something's happened in the home, or could they pick them up some milk on the way home? So it may be stuff we don't formally recognise, but actually it's an unpaid form of care that's happening. And 61% of unpaid carers said that they were worried about living costs and managing financially in the future. Now, here comes the key stat for obviously what we're focusing on today. 64% of unpaid carers have thought about switching jobs for flexibility. So to be able to kind of continue to support some of those caring responsibilities while still being able to earn a living and drive your careers. And I think it's fair to say, as somebody that works with some of the UK's biggest employers, that sort of flexibility is really growing in momentum. We're seeing a lot more workplace policies that are coming in. We're seeing a lot more support for flexible working. The consequence we need to think about that is, what could the impact be financially? And we've also got 1.4 million sandwich carers that are currently in the UK at the moment, 61% of them being women. So what do I mean by sandwich carers, or sometimes referred to as the sandwich generation? That's where we still have young, perhaps financially dependent children that are pushing in this way. We've also found ourselves in a situation where we have elderly parents or dependents pushing in this way. And then we sit firmly in the middle, having to kind of support both sides, whilst also maybe still holding down a little bit. And I am certainly somebody that can put myself in the category now as sandwich carer. Because I've got 2 young children. I've actually got ill parents that sort of sitting this side as well, and then sitting right in the middle of that. So there's a huge financial cost and implication that comes to those caring responsibilities, whether that's through the direct costs of caring, whether it's reduced income, because many then look to go kind of part-time, reduce hours. And then we need to think about what the consequence of that is around benefits, so pension funding, opportunities for income, stress, and certainly debt risk as well. And then when we think about the whole household, so whether it's that caring responsibility which then leads us on to think about our wider kind of network that potentially has those financial dependency on you, it's thinking about the what ifs. So what if I do change my job? You know, who's affected financially? What's affected financially? What happens if I'm actually unable to, I decide I'm not actually going to change job, I'm going to stay where I am, that something was to happen that was to prevent me from working. A diagnosis was to come through, redundancy, you know, was to happen. And it's about asking yourself some of those really key questions. What emergency funds have you got in place? What savings buffer? Debts, you know, what are those commitments that still need to be maintained? And then thinking about sort of wills, power of attorney, how can I protect people as best I can? Now, unfortunately, more linked for the women in the room is around menopause. And again, when we're thinking about this career transition, it's just being mindful of what other wider circumstances can play a part as well. That does feed into confidence. There's huge stats and studies around how menopause kind of affects confidence, obviously clouded thinking that can then have an implication for jobs and so forth. But in terms of, you know, what we're seeing right now, it's very, very real in terms of what that's done to the workforce demographic, and certainly again that lack of confidence piece. And like I said, I work with lots and lots of women within their careers through the nature of doing financial education, one-to-one coaching, and that's really real. And actually, when you get to the bottom of it, it is because it's a kind of menopause symptom that's driving some of the other behaviour around. I couldn't possibly go for that promotion. Gosh, I'm getting flushes. I'm getting brain fog. All of these sorts of things that can also stop that. And unfortunately, there's no magic answer to that other than obviously speaking to your GP, considering what might be hormone replacement therapy that can ease that. But again, the stats are clear around some of the financial implication this can have if we don't kind of look to do everything we can, to ease some of those symptoms to enable us to be able to continue to work. And sort of for the men in the room, this could affect obviously your partners, it could affect your children, kind of longer term. So it's just about forming that kind of allyship as well. It's about understanding that financially the household does need to operate as one. I know kind of where we are generationally, we still have a lot of separate finances being operated, and I'll also be a huge advocate of that as well when we go on to look at divorce, because it is important to have that financial independence. However, whilst you are together, it's really important that everybody understands some of the impact and detriment that's perhaps happening to a partner and how you can support that, as well, and think about the role that kind of plays, and just have those open conversations. Money's a really taboo subject in the UK. It still is in many households where it's not really openly spoken about. And what we want to do is try and remove those barriers so that more people are having those good, healthy conversations, because it will flesh out any issues as well, particularly with a career transition or a potential career change. Really important that is a household conversation and get everybody's input, but also everything out on the table around liabilities, commitments, opportunities, and where those life goals sit for each of you as well, for those of you that are in partnership. And I said before, menopause does have a huge impact on money. Typically, some people will look to reduce hours as a way of that coping mechanism, and with that will obviously become a reduced income, that lower confidence piece, which we've spoken around, having to retrain potentially, leaving work to avoid kind of stressful situations, spending money as a distraction. Again, where I've worked with lots and lots of females, there is that, sort of the impulsive shopping to feel good, maybe gained weight, and go and get new wardrobe thinking. It's all of these things that can really play in. And when we think about another life quake, and what we mean by life quakes is these opportunities, these situations, good and bad, that happen in life. And when they happen, they do disrupt the financial landscape around us. So what we want to do is ensure we put as much infrastructure around that as possible. So when we think about another life quake that can happen, the reality is, unfortunately, it could be divorce. So we can see the statistics here that in the last 50 years, 1 in 3 marriages in the UK have ended in divorce. And most divorces are happening between 45 and 49. So that could be quite a pivotal age for people when they're thinking about making those career changes. And in terms of, from a wealth perspective, it stands to reason that divorced couples typically have lower wealth than a married couple, purely because obviously we see that separation that happens on assets. But if going through that difficult situation yourself, or a friend, a family member, somebody in your network, or even if you're sitting there thinking, life's not being particularly comfortable between the two of us at the moment, so this could be a reality. Again, in terms of things to consider, things to bring into that action plan, perhaps before making that decision to then change job, is money and assets. Again, getting it all out the table, making that list and having that transparency around what do we have? How does that all look like collectively? Property, mortgages, pensions. This is the most overlooked area in divorces. Why? Because typically when I work with sort of employees, they'll say, well, because they've agreed for me to keep the home whilst I raise the children, I'm not interested in their pension. Big mistake, because when we look at the statistics on the disparity between men and women's pensions, both pensions need to come on the table to make an informed assessment and a decision. And that can be the risk of not having legal kind of support to drive that financial settlement. Things like child maintenance, but also even managing money after divorce. I had a friend that went through this, and it was only once she'd gone through divorce, I got lots and lots of phone calls from her saying, this might sound bizarre to you, but I've never had to set up a gas account, an electricity account to pay, take out mortgage insurance. I've never done anything like this before because it's always been done for me. So it's thinking about what will still need to be done or maintained moving forward. And again, what we need to be mindful of when we think about your current career, potentially changing career, we have got things such as, the gender pay gap that is disappointingly, but still in existence. Slightly outdated stats now, but 13.1% is what that pay gap was back in April 24. We know the gap widens considerably once workers are over age 40, and there's reasons for that. Again, because it plays into perhaps caring responsibilities, typically assumed by women, if you look statistically, so fewer hours, lower salaries, taking career gaps. So if anybody that's raising is going to assume the role of raising the family and coming out for a period of time as well. So that all plays into the pay gap that we've got going on in the UK currently. So I guess what I would say is if you're engaging in conversations to move your career moving forward, know your worth, and go into these conversations informed, confident, knowing perhaps where that disadvantage is currently sitting for you. So what can you do in that negotiation offer to make that difference, to compensate for some of this disadvantage? And what goes hand in hand is when we see the pay gap, we then see the pension gap that exists as well. And on average, women are retiring with pension savings of 69,000 compared to 205,000 for men. And that's purely because when we looked at the caring slide before, we could see the statistics around typically how people are navigating that. People are tending to go part-time if they have that caring responsibility. But if we're part-time, then it means our employee benefits are also potentially maybe half of what they would be if we were full-time. So again, it's just being mindful to where those financial implications are, but also, again, having those good conversations. If you are in a partnership, if you do have joint finances, it is just having those open conversations around, if I'm going to assume this responsibility, what can we look to do for you to maybe be able to top up my pension or take on a bit more over here, however that may look. There's no right or wrong with that, but it's just about making sure that those good open conversations are happening. And as somebody who does have a very young daughter, that kind of always upsets me, in the sense of by the time a girl is 3 years old, they're already behind. So what we mean by that is, even if they were to take out a pension at 3 years of age, currently they will still not be able to kind of bridge that gap because of the way in which the disparity works. And that was a study that was done by Now Pensions. It was quoted by the Financial Times. And in terms of, if we look at the Office of National Statistics, women do currently have a higher life expectancy than men. So not only, ladies, is your pension pot perhaps considerably less, you also need that to work even harder than perhaps, and for longer than what it would perhaps need to for the men in the room. Okay, so again, it's about forming that allyship. It's certainly not meant to be a, well, you're better off than me, and cause any kind of riots in the household. It's more to, again, just be informed. And unfortunately, if I think from my husband's perspective, it's the other way around in our household, where it's obviously me kind of sharing a lot of that financial education back at home. But to look at, how do we do these things together? And actually, like I said, as somebody with young children, how can I actually start to support kind of my own children in those journeys? And just to know, children absolutely can have a pension scheme. If they don't legally, obviously can't do anything with it till they're kind of at retirement age. So 55 currently is the earliest they can take money out, but that's lifting to 57 with effect from 2028. But there's nothing to stop you as parents paying in for them, grandparents could pay for them. And as it stands at the moment, they do get tax relief on there as well. So it's a really good opportunity to build resilience for yourselves, but also thinking about, what sort of strategic tax planning could be as well. And then we've sometimes got the not so nice situation that can come, that can force us perhaps to change jobs or to reevaluate what we see next. And that's redundancy. Now, I will always come at redundancy really positively, purely because if I think about my own career and what I've seen from many, many, many thousands of employees that I've been able to be fortunate enough to support throughout the years as well, it can be the best thing that will ever happen to you. It can be that push to go on to something new, where maybe it might have felt more comfortable to stay doing what you've always been doing. And if you're really fortunate, there can sometimes be some money that kind of comes with that to also be able to put in the bank and either have to support you until you move into a new career, or if you manage to get a job straight away, then you're able to just kind of park that into some savings or investment. So you don't pay any tax currently, up to 30,000 of severance money. It's really important to note that's everything combined. So, and that is within the financial tax year. So if you were to get a big severance payout, you would jump straight into a new job on a good salary. You need to be really mindful that any amount over that 30,000 is taxable. That will also get added to any other salary also earned within that tax year. So you could end up being pushed into a higher tax bracket than perhaps where you typically would sit. But up to the first 30,000, tax free. So it could be a really, really good opportunity. It enables you to take that and think about, what should I do with it? So this is where, from a career change perspective, it can supplement income until you get a new job. It can help clear some debt and reduce sort of some of the liabilities over there. It might help you to save for the future. So when we think about our short, mid and long-term goals, boost your pension so you can pay lump sums into your pension and get that tax efficiency. Invest money for the longer term, or use that money to retrain, or maybe just set up your own business. So again, I've worked with lots of employees that have liked the opportunity of saying, do you know what, actually, I'm a bit done working for a large corporate. I know my value. I know where there's maybe a gap in the market. Set up myself. And we're seeing lots and lots of opportunity for that as well. We might just need to be mindful about the budget and what's going to come on the 26th. But when we specifically think about the career change considerations, and if I can really encourage you, I can see throughout there's been sort of photos of slides. I'm hoping these will be available kind of for you as well post event, so you can take these away. This would be your kind of key kind of action plan, taking into account all of those areas where there can be some disadvantage, there can be some financial impact, to pull it in. And the first thing, looking at that salary impact, it is about planning for that short-term income dip. It is more apparent that when people change jobs, it can be a lesser salary for a period of time. Obviously, it can be a win-win if you straight away change career and it's enhanced. But sometimes if we're making that much of a shift, there may be 0.2 here around training and that sort of transition cost. So we might need to be needing to retrain, go back into education, pick up some exams. And again, it's about working out, so you can see on sort of on the right-hand side of the slide of the action plan, it's what to then think about. So estimating those transition costs, those loss of earnings. It could be, I was only working actually with an employee that was talking to me about, they're thinking about moving jobs. And they were saying about, the trouble is, I work from home now. They're going to want me in the office a lot more with this new job. And I've actually just looked at the season ticket and it's pretty punchy. And it's something I hadn't factored in. So again, it's looking at not just the basic salary. Please don't make moves on basic salary in isolation, which many, many people do. Always think of it as the total reward. There's a benefit perhaps now to even working from home, because you're not paying commuter costs. You're able to put a wash load on. You're able to knit that milk down for where your kind of sandwich priorities sit with that sandwich generation. That's got an embedded value if you've got that flexibility. So think about all of those things. Savings buffer. Now, when we talk about emergency funds for a rainy day, we typically look for 3 to 6 months. The misconception that always exists is it's 3 to 6 months of your current monthly salary. It is not. It's 3 to 6 months of your essential spend. So when you do a budget, which I'd really encourage you to do, and there is a fantastic one on the Career Change Toolkit that you can access. When you do that budget, think about it in 3 sections. Think about your essential spend. So i.e., I'd be homeless and I'd be very cold and hungry if I didn't pay for these ones here. Think about the nice to haves, the gym memberships, the kind of the Netflix, all of those sorts of things that really, if push comes to shove, you could do without for a period of time. And then think about that debt column. What liabilities have you got that absolutely need to be maintained at all costs and cannot be defaulted on? And when you think about that 3 to 6 months, you're thinking about that essential spend with the minimum debt requirement. Okay, the luxuries can be parked for a period of time. That can actually help make it a little bit more achievable as well for people. Because if we sometimes think 3 to 6 months on full month salary, it can be quite demotivational to try and get there. But it is really important. If COVID also taught us anything, statistically, we saw that it was this lack of savings buffer that unfortunately was very problematic for people with furlough and all of the other situations. So it's really essential with a career change, you start now before perhaps you're about to jump, to start thinking, am I building up? Am I going through these points here? Again, think about longer term outlook. So for those that are perhaps considering a total retrain to go into something very different, try and then forecast that 3 to 5 years forward to look at the earning potential at that point. So it might be that you have that short-term impact, but actually once you're through the training, once you've qualified, once you can progress, wow, you know, the earning potential looks far greater. So really important to then be able to then set your sights on, I've got to rein in for a period of time, but actually perhaps that sort of lifestyle comes back down the line and once we've been able to sort it. Pension and benefits, you know, I'm always really going to, you know, come from this angle as well, because it's like I said, it's not just about the basic salary. You know, we've seen all of those statistics we've just gone through around the gender pension gap, you know, divorce and how pensions are typically not looked at. The state pension in isolation, if you were to live now purely just on the state pension isolation, you are deemed as living under the poverty line now. So it's not sufficient. It was never designed to be, you know, all-encompassing. It was supposed to just complement perhaps your own private, you know, pension provisions. Some people are property, they maybe want to downsize, release equity. However that looks, it's what it means to you. But think about, if you're currently in employment, what do you get? You know, what else is kind of all part of that for you as well, because it's really valuable, really, really valuable. Little anecdotal kind of story here. But when I was in a particular employer doing some financial education sessions, we were talking about company benefits. And one of the really valuable company benefits that they had was death in service. Some of you may be familiar with that term. It's now been changed to group life assurance. And there is a reason for that as well. And I saw it play out in this particular place of employment, because somebody put their hand up and they said, I've really struggled with this to understand why this is always seen as such a valuable benefit. I said, okay, why wouldn't you see it as a valuable benefit? I said, well, realistically, what's the chances of me dying at my desk in order for this to pay out? And at that moment in time, I saw a few other people kind of look as if to go, yeah, it was very clear that somewhere along the line, that was the belief that by calling it death in service, it needed to almost be this kind of workplace accident in order for it to pay out. And the change to this employee's sort of face and actual financial, you know, security, when I explained you can be on holiday, you absolutely don't need to, you know, die at your desk, and let's hope that never, you know, kind of happens as well, to be clear. But it's this multiple of salary that's going to pay out, you know, tax-free, and it's up to you who you want those payments to be. And you could sort of see when they, you know, given the fact the multiple was 5 times, which is pretty generous for what you typically tend to see. So when they were mulling over their annual salary, timesing that by 5, and then the fact that's a lump sum, they were like, I don't think I'm going to share that with anyone at home around what I'm actually now worth, kind of on debt. And typically, the reality is we do tend to find we are far more well off on death than what we are, you know, in life, unfortunately. So it'll never benefit us personally, but it gives a huge amount of security to your loved ones. And again, when you're thinking, going for interviews, you're talking about these overall benefit offerings, don't be scared to ask, what's the benefits here? You know, sometimes it's on the website so that you can do that hard work for you. But budgeting, really important, debts and savings as well, adjusting perhaps some of those thresholds as well. So if you've got a really healthy investment that's going in, but you're right on the cusp of a career change, you're going to be taking a dip in salary, then again, it's that reprioritization piece. And I just wanted to kind of cover this before we move on to sort of your own questions. I wanted to put this in because obviously we do have the budgets that's coming. I think everybody's very apprehensive around what is actually to be coming, because there's so much rumour that's kind of is out there, but also very deliberate leaking, because that's what happens with the budget. They like to do what we refer to as the squealometer. So they slightly drip out bits of information, and if we all squeal and go a bit crazy, and the press and the industry, then they go, well, maybe we need to rethink about that. So there's been lots of squealometing that's been going on with the budget. We now need to wait and see. But what I would encourage you is, when you're thinking about career changes and you're thinking about this from a finance perspective, it's really, really important to operate in tax years. We mentioned before about sort of from a redundancy perspective, any amount over 30,000 is taxable. It is combined with then any other salary you've earned within that year, but also allowances. Certain tax allowances are a case of use them or lose them. So things like ISAs in particular, and ISAs, in case it has escaped your attention, is some noise we've had from the budget around whether we're going to be seeing a reduction in those limits. Typically, and again, I can't promise this, but typically they will wait until the next tax year to implement any changes. So if you've got opportunity for pensions via things like salary sacrifice, it's about thinking now, what can I do? What's going to put me in the strongest situation moving forward, so that then whatever the budget says, hopefully they won't make anything immediate and they'll give us until the next tax year. Things like pensions, you do have carry forward facilities. ISAs, you don't. So there are those allowances that are a use it or lose it, or sadly you're not able to get more in. And lastly, in terms of so what and what's next, how can you be helped? I really would encourage you to go and have a look on the Career Shifters and the Change Can Happen website, and have a look at the Financing Your Career Change Toolkit. You can see here what's included. There's some brilliant opportunities to watch some pre-recorded masterclasses on there as well. One person may look familiar because she stood in front of you, but I did do a little money session on that for them. But lots of other fantastic speakers that are also covering lots of the other sessions that you've been benefiting from as well today. And importantly, there's a budget calculator on there as well. So there's all those resources that we've tried to help try and get it in one place, so that you've got these kind of logical decision trees and to help feed some of your information gathering exercise as well. But informed decisions are what we want when it comes to money, not kind of knee-jerk reactions or acting off impulse. We want to make sure we're doing everything with all the facts to hand. And unfortunately, this wasn't something we were taught at school. We are seeing that change come. Been lots and lots of hard lobbying from all the financial institutions to get that on the national curriculum. Delighted that we are now getting it on the national curriculum, and it will be primary and secondary. That doesn't help us, does it, sadly? Because unfortunately, it comes down to us either doing our own research, or for those of you that are in employers or going on to employers that have a good financial education strategy, then hopefully, we'll get picked up along the way as well. But I really would also give a massive shout out to the MoneyHelper website. So that's the government's website that's got lots and lots of unbiased factual information for you to read out. What is an investment? Attitude to risk. What does that really mean? So all of that sort of guidance is available as well. And before we just move on to your questions, and to finish on a positive, because I know with the finance section, it can also seem a little bit like, God, so much to think about, and it can feel quite onerous as well. So hopefully that action plan will help you to break it down. But a career change, it isn't a step backwards. It is an investment in your future self. So you plan it like a strategist, you fund it like a dream, and you pursue it like it's priceless, because your growth is the thing that will always yield the best return. Okay, so the money is a very, very important part, but it is also a small part in helping you to realise your potential, but also achieve your dreams as well, and go for it. Okay, I'm going to open up to questions.
Just mentioned something about group life insurance.
Yeah.
So if you work for a company and you've got that, that's fine. Some people rely on that and don't have their own personal life insurance. And I would just say, if you are going to be made redundant, think about that, because you're going to lose that benefit. You need to look at your own personal life insurance within your family to make sure your whole family's covered suitably. Otherwise, you'll leave and then suddenly that's a gap.
Yeah.
Another thing that's of interest, sometimes people say, for example, have cancer, and that means that they then cannot get their own personal life insurance after that. So if they move properties, this benefit at work, this group life assurance, is very good because obviously it gives your family some benefit, but that's obviously only while you work. I
Yeah.
just thought I'd mention that.
Yeah, definitely.
Because obviously it is a fantastic
It is.
benefit, but it can leave a gaping hole if you leave the
It
company.
absolutely can. Yeah, and that's why we stress around that total reward. Don't just think about the salary here. Think about everything you're leaving behind, because you're quite right. And just in case anybody online or didn't hear the question, it's about understanding the value of some of those employee benefits. Group life insurance being one of them. Private medical could be another one. I'm speaking to lots of employees at the moment, and it's a deal breaker for them because they're like, I've got such good private medical insurance where I am currently, and unfortunately, the NHS is in a very challenged kind of state at the moment. So this is a real consideration. And also what happens, is there a continuation option? Sometimes there is, because you're deemed a good leaver, so you can take it on personally and with medical history disregard. Sometimes not. It can be incredibly expensive if you're then picking up, like we've had the example, if you're picking these benefits up personally, you suddenly can be like, wow, I never actually appreciated how expensive those benefits are. Now, the only thing I would say in terms of from a value perspective, if you are having those sorts of employee benefits, they do generate a P11D. So they are your kind of what we call benefits in kind. So therefore, yes, you have had some form of tax implication on those, but that statement, which we typically never look at when HMRC send us stuff, or, I understand, but what it will do is it will give you an equivalent of what that company car is perceived at, what that private medical is looking like as a benefit in certain insurances. So that's a valuable document. So again, think about my total reward. So when you're going into that interview, you start to negotiate salary, you're negotiating salary, and then that benefit piece. And there's nothing wrong that if they don't kind of have that benefit for you to say, then this is where I'm going to look for the difference. That's going to be the negotiation piece. So yeah, really valid question. Thank you very much for that. Anyone else got anything?
Yeah. Just if you're taking like a career break, I was just curious if there was any sort of maybe tax and efficiency kind of incentives to contributing to like national insurance.
Yep. So the question was if you're considering a career break around the sort of national insurance considerations. So you can absolutely make voluntary national insurance contributions. National insurance is what helps you to build a state provision, particularly around things like your state basic pension, sick pay, maternity pay, paternity pay. So it is really important to give that some consideration. If anybody is interested in thinking, what does my national insurance record look like as it stands? And again, I would encourage you to get this document so that you're making an informed decision. You can get that for free. So you can get your state pension forecast just online. You can actually now do it through the government gateway. If you don't want to mess around with a BR7 and wait for it to come back, just go online, register for that gateway account. You can request your state pension forecast. What it will do is it will give you a list of your national insurance history. And what you're looking for is 35 years of national insurance that then gives you the full entitlement for state basic pension. Now, it will always project as well the age you are now, and kind of, it's not going, oh, we know you're 14, sorry, you've not done 35 years, so no. It's just where you are at that moment in time. But you need to have 35 years national insurance contributions to get the full state basic pension. You need 10 years of national insurance contributions to get anything at all. So if we had a situation of somebody from overseas that came and worked, paid into the system for 7 or 8 years, no entitlement at all, unfortunately, and also no refund back on that national insurance, because of course part of it has also gone for the healthcare service and other kind of provisions, education, etc. So really important, minimum of 10 to get anything at all, 35 years to get the full state pension. And what you can do is buy back years, as we were saying as well. So it could be, again, something to do yourself, or it might be a household conversation to say, if I'm taking this career break, I'm looking to do X, Y, Z. Could the finances that we've accumulated look to also buy back some years, so I actually have no impact on my state national insurance record? If you are claiming any form of statutory benefit, then again, I would encourage you to consider that, to also look on the government's website, because some of those statutory benefits also give you a top up. So they are maintaining that national insurance record for you as well. And some don't. So again, it's just being mindful of the situation. Does that answer your questions?
Yeah, that does. Thank you.
Sorry, what's the website you get to?
To get your national insurance, so you can create a government gateway. So if you just go on the sort of HMRC, or even just Google state pension forecast, then you just click on the approved link, and then you can do that online. If anybody isn't comfortable or doesn't want to do it online, you can request a kind of paper form and send it off, and then you would get a physical copy back through the post as well. That's what you'd prefer.
I just wanted to ask, for the state pension, can you top up yourself if you think the money is short? Because I noticed because I'm not really like local, I can hear like below maybe this. And then I noticed that there's a gap when I did part-time work.
Yeah.
So it doesn't really calculate as like a whole year. There's gap
Yeah.
in between. And I think the one way to fulfill the gap is sometimes you can do gift aid or do some voluntary, but I think the contribution is still like minimal. It doesn't really close the gap quite sufficiently. So I'm not really sure whether there's a way, if I wish, I can pay or top up the state pension myself to close the gap.
So you can do that. So the question around if you've got sort of non-qualifying years, so you have worked, you have paid national insurance, but it didn't qualify as that full qualifying year, can you top it up? So yes, you can. It would be that case of buying back those years. You can absolutely do. Or it's also thinking about, by the time you get there, will you actually end up having done those 35 qualifying years anyway? So again, it's useful to get that forecast and then think realistically, how many more years on top would I need to work? And is that realistic, or actually is it not? The other big part to supplement, and we should always be wanting to look to sort of supplement the state pension, only because it's not going to be providing you with any level of glamour. And also, again, there's lots of concern around the life of the state pension and how that's going to look. We know we've got medical science evolving at a rapid speed, is enabling us to live, longer, healthier lives. But what that means is the state is under pressure to be able to maintain. What do they do to combat that? Shift the state pension age. So we've already seen that that's currently up to 68, lots of speculation that it's going to go up 69, 70 for some of our youngest generation coming through. So this is where you look to your private pension schemes or your employer, if that's you're in PAYE, looking at their pension schemes and doing as much as you can whilst you can and whilst it's affordable to top up that pension, take advantage of the tax reliefs. So a pension is still, and I'll say this now before the budget drops and might change things, but currently it is the #1 tax efficient investment vehicle you've got access to. It is the most tax efficient. So that's your opportunity to look to bridge over and hopefully benefit from some of that compounding growth through investments as well. I can still see hands, but sadly, I've had that magic sign that's telling me that I've got to stop. So what I would do is I will hang around outside. I'd love to answer your questions. If anyone wants to grab me, please do. Thank you so much for taking the time to join. I hope it's been useful for you. And I wish you all the very best with whatever the future looks like. But I'll be outside, so please do grab me if there's any questions that you'd like to ask.